All right, so in order to file income taxes, you have to know what's going on with your income, with your salary. Part of that is knowing how much you are supposed to make. Part of that is knowing how much you actually end up making, taking home. And the difference between those two is what ends up being taken out for deductions. Some of those deductions are going to be to help pay for benefits that your employer is providing you. We've talked about those before, things like health insurance. Sometimes you help contribute to that, and then your employer pays for part of it as well. And some of those are going to be taxes. The taxes are the kinds of things that you need to be paying attention to when it comes to filing your income tax form. What happens is, well, actually in the US today, thousands of people are going to be going to the mail box and to the post office or getting on their computers because today is tax day, which means it is the due date for everyone to file their taxes for 2015. If you look back at what we were just looking at in 7.1, if we go back to that example again real quick. If you were a single person who had earned something between $51,450 and $51,500, for the year, the calendar year of 2015, based on this table, you would owe $9,213 in taxes to the government. Okay? Most people are not going to be real happy about the first of 2016 rolling around and them having to come up with over $9,000 to pay taxes for 2015. Okay? So what usually happens is that when you start a new job and all of the paperwork you have to sign when you start a new job, one of the forms is going to be called is going to be called a W-4 form. So there's W-4 and there's W-2. Okay? The W-4 form is the one that you sign when you start working. And part of what you're going to put on the W-4 form is an indication of how much money you want withheld from every pay period to be put toward your taxes. So the idea is to try to have enough withheld from each pay period that when you get to the end of your calendar year and you know you have to pay $9,213 in taxes, that you've already had that much taken out and you have enough to cover it. So you're not trying to come up with $9,000 all at once, all of a sudden, at the beginning of the year so you can pay it. You've already been paying it little by little throughout the year. Okay? So that's how this is supposed to work. Now, sometimes either you don't quite calculate correctly or things happen, whatever, and you don't quite cover it, and then you have to pay the gap, how much you're missing. Other times, you overshoot a bit, you end up withdrawing from your paycheck much more than what you need, and so then when you file your taxes, you get what's called a tax refund. They will pay you back the extra amount. Okay? But your goal is to try to estimate about how much your taxes are going to be so that you can set up the withdrawals to cover about what that amount would be so that it's not a big gap and you're not way overshooting it. You're pretty much taking out through the year the amount you're going to need for your taxes. Okay? Now, what can change about that is things like how much taxable income you actually end up with. Okay? We've talked again about the fact that we can have pre-tax contributions to things, like our retirement or to different things like that. So that can lower the amount that your tax actually gets calculated on. So that can change things. You can have deductions that are allowed. Again, if you have a spouse or a dependent, those are things that give you a tax break, give you a deduction on how much you have to pay. If you travel as part of your job and you're using your own car, you can usually get a tax deduction or tax break for that. So there's all of those kinds of things as well. And so you have to figure out what your income is. You have to figure out what's being withheld or what should be withheld. And you have to kind of think about, do I have enough of these kinds of deductions that it would make a difference? Or do I just have a couple of them and it's really not going to make a difference anyway, and so then, I want this form instead of this form or whatever. So those are kind of all of the pieces that have to get put together to make this work. Okay? So in order to know the income part, there's really 3 different ways that information can be communicated to you. Your pay stub, a W-2 form, and a 1099 form. And so that's kind of what we're going to look at today, is what are these things, what kind of information do they each tell us, how are they different from each other, that kind of stuff. Okay? So before we actually get to those, let's take a look at example 1 and just talk a little bit about what kinds of things can affect your salary and what you actually end up taking home. So this is Barbara. And Barbara started a new job, and she just wants to verify that her net pay has been computed correctly. Does anyone know what net pay means?
It's the pay that you have after deductions.
Correct. So net pay is pretty much the amount you get to take home. Okay, the amount that you actually get access to after all the deductions are done. So it says her gross pay per pay period is $269.75. What's gross pay?
Everything together.
Everything together. So if you sign a contract that says you're going to get this annual salary, and they take that annual salary and they divide it up according to your pay periods, whether it's going to be bi-weekly or bi-weekly, semi-monthly, monthly, those are the ones we talked about. So however it is you're going to get paid, they divide it all up, and that amount that is just your salary divided up is what's called the gross pay. So it's kind of like, here's what you kind of should be getting paid. Okay? And then life kicks in. And then life takes all these deductions out. All right? So she has her 6.2% FICA tax. Remember, FICA is just another way of saying Social Security. So 6.2% of her gross pay is going to be taken out for Social Security. 1.45% of her gross pay is going to be taken out for Medicare. Okay, those are things we've talked about before, so that shouldn't be anything too weird. Then she has federal withholding tax, and she has state withholding tax. So that's that amount that we were talking about a second ago, where you're trying to kind of calculate how much should I take out each pay period. So at the end of the year, it's going to cover whatever my taxes are. That's what they're talking about when they talk about withholding. But you need an amount for your federal taxes, and you need an amount to cover your state taxes. And those are usually listed as 2 separate things on your pay stub. Okay, so we've got $47.50 being withheld each pay period for her federal withholding tax. She's got $16.62 being withheld for her state tax each pay period. And then she also has these contributions that she's making. So she's got a retirement insurance contribution of $9 for each pay period. She's putting in $2.56 for disability insurance. She's putting in $12 for medical insurance. And she's putting in $6 for dental insurance. So those are not necessarily taxes. They are deductions. They will be taken out of her paycheck. So they're not going to be money that she's necessarily taking home right now. But they're not money that's being sent off to the government to pay for stuff. This is money that the company that she's working for, her employer, is using to invest on her behalf, to pay premiums on her behalf for insurance, those kinds of things. Okay? So these are the taxes right here, maybe, if this will work. Here we go. FICA, Medicare, federal withholding tax, state withholding tax. The rest of these are contributions that she's making. So all of these insurances, these are just things that she's helping to pay into so that she has that benefit if she needs it. Okay? So this first question then is just asking if her gross pay starts out at $269.75 and she's got all of these taxes and deductions and everything happening, then what is her net pay for the period? See if you can figure it out. How much is she actually going to take home?
155.43.
And what did you do to find that?
I added everything together, but first, before I did that, I multiplied 6.2% with 269.75, and then I multiplied 1.45 times 269.75, and then I added the bottom numbers together. So what I got for that was 114.32. So I subtracted 114.32 from 269.
Okay, does that make sense? So with FICA and Medicare, because those are a percentage of your salary, you have to figure out what that amount is first, right? So you're going to take your 6.2% for Social Security. That ends up being about $16.72. And you take your 1.45%. That ends up being about $3.91, $3.91. Okay, and then, like Nicole said, let's just add everything up. Let's figure out what the total amount of deductions is. So here's our $16.72 for Social Security. There's our $391 for Medicare. There's our $47.51 for federal withholding. There's our $16.62 for state withholding. There's our $9 for retirement insurance. Our $2.56 for disability insurance. Our $12 for medical insurance, and our $6 for dental insurance. All of that is getting taken out of her check. Even though they're going different places, it's all coming out of her check, and therefore decreasing the amount she's actually going to get on her paycheck. So the total of all that is $114.32. Subtract that from her gross pay of $269.75. And her net pay, what she's actually going to get deposited in her bank, will be about $155.43. Okay? Does that seem like a lot?
Yes. The salary or the deduction?
The deduction.
Yes.
So deducting $114.32. Does that seem like a lot of her check? Kind of does. But it's not always real easy to tell just by the amount because it kind of depends on, well, how much of a check was she getting in the first place. So let's change it to a percent. What percent of Barbara's gross pay for this pay period accounts for all of her deductions? Round to the nearest tenth of a percent, and they're giving you a reminder her gross pay was $269.75, and her deductions were $114.32. So what is that as a percent? What percent of her gross pay ends up being deductions?
She gets to take 114.
About 42%.
Yeah, 42%.
Does that follow the directions of the problem? I'm being picky, but just, again, practicing.
42.4%.
There you go.
Oh.
Because our directions say to round to the nearest tenth, right? And you should all know by now, if you don't follow those directions, you get points taken off. It tells you that's what you got to do. So yeah, 42.4% is what we're looking for. So what do you think now? Does that still seem like a big chunk? Kinda, yeah. So she's really taking less than 60% of what she's supposed to get paid home. Now, it doesn't mean that it's going for bad stuff. All those insurances are good things. Her retirement is a good thing. But in terms of, I need to take money home to feed my family this week, like, you have to be careful that you're not thinking, oh, well, I'm supposed to be getting paid $269.75, so that's how much I have to spend. It's not going to be. And it's probably one of the biggest shockers that new workers have when they get a job, is that they're told, even if it's hourly wage, they're told you're going to be making this much an hour, we're going to have you work these many hours. You do that quick calculation and go, oh, cool, dude, I'm going to be making so much money. And then they get their first check and go, what the heck? That's like, barely half, or just a little over half of what I thought I was getting. What the heck? Well, what the heck is taxes? And any other kinds of deductions that maybe you went along with as well. But a big part of that is just the taxes that have to be taken out. Okay? Questions on that? Those two problems together? That makes sense? All right, example number 2. So here's our first little figure. It's this first one for example 2. You can see it a little bit better on your paper than you can up here on the screen, I think. So this is an example of what a pay stub might look like. The actual organization of a pay stub is going to differ a little bit from company to company, employer to employer, but the kind of information that's on it should be pretty much the same stuff. Okay? Back in, I think I mentioned this before, but back before things got so electronic and so digital, you would actually get a paper check for your paycheck, and there would be a little piece of that would have a perforation where you could tear it off, and that was literally what was called your pay stub. And you would tear it off of the check before you went and deposited or cashed your check at the bank, and you would keep your pay stub from one payment to the next, and that would help you keep your records then of what your income was and what your taxes were and all of that kind of stuff. Nowadays, with salaries usually being direct deposited into banks, you don't actually get a paper check as easily anymore. It's just a direct deposit. It's all done electronically. Usually the pay stub now is an email. They'll send you an email and they'll outline the same kind of information on it for you, so that you can keep track of what's going on. So they'll usually start out with a section about your earnings, what you've made, and what your pay period is. So for Lorna here, we're talking about getting paid bi-weekly. And so you can see here that her time period from 3/15 to 3/28 is about 2 weeks. Okay, so you know exactly which 2-week period this pay stub is representing. And then you usually will get 2 different columns that tell you an amount. The first column represents the amount for just this pay period. So her salary, her yearly salary, divided by 26 means that every pay period she's getting about $4,596.39. Okay? But then the second column has this YTD in front of the word amount. YTD stands for year to date. And so what that means is this is the total amount up to this point for that category. So for her earnings, she's making $4,596.39 each pay period. But by March 28th, she has made a total of $32,174.73. So her year to this date is this total. That's what this second column is for. Okay? So that's what you're earning, and then we start breaking it down into what's getting taken out. Sometimes they call them deductions, sometimes they call them adjustments. So you can see there's 2 different types here, deductions and adjustments. Sometimes they'll just start listing all of the things that got taken out, whether it's taxes or contributions or whatever. So that's where things can be a little bit different from document to document, depending on how your particular employer decides to organize it. But what you should see are all the taxes that got taken out. So again, Social Security and Medicare are considered to be a tax, so they should be listed under the tax section. And so the 6.2% of this amount should be that 280.79 number. The 1.45% of this earnings amount should be that 65.67 number. And then again, over here, they're just telling you how much total you have paid into Social Security and Medicare at this point in the year. And then you have your federal and your state tax. State tax is usually less than federal tax. And so again, you've got how much was taken out for federal tax, how much was taken out for state tax, and what those totals are up to this point for the year. Okay, and then down here they're calling them adjustments, but these are still amounts that are going to be taken out of the check. But these are not taxes. These are not going off to the government to help pay for things. These are things that are being paid to other entities. So union dues, family health insurance, retirement, those are other things that are being deducted from the check before they say, okay, here's the amount that we're going to put in your bank. Okay, so using that information then, and assuming that Lorna's salary and all of the deductions are going to stay the same throughout the whole calendar year, the question is how much will be taken out of her total annual gross salary for federal and state taxes. Now, Social Security and Medicare are a little bit weird because they are considered taxes, but when they ask you what are your state taxes or what are your federal taxes, you do not usually include them as part of the answer. So when they're asking this question, they really are just focusing on these two. Okay, they're not taking those two into account, even though they are technically a tax. Okay, so with that in mind, see if you can come up with what that answer is. And do it separately. See how much the federal is going to be, see how much the state's going to be in, and see how much it's going to be total. All right, so how much is her federal tax going to be? Say it again, please. 26,038.22. Okay, and the key here is the fact that it's biweekly. So we should remember from our other chapter that biweekly means 26 different pay periods. So we're just taking the federal amount times 26. Okay, how about state tax? Okay, $7,303.14. So then in total, how much is she going to be paying?
33,341.36.
Yep. Okay. So again, what percent of her annual salary is being paid in taxes? If this is the amount she has to pay in federal and state taxes, what percent of her annual salary ends up being just her federal and state taxes?
Yeah, that's what she needs to do. So just pay more than that for 5 years. It's, because I'm getting in 26 here. Yeah. I'm getting 100 cents.
Yeah.
It's just like, yeah, that was
So about how much is it?
I'm getting over 100%.
That's not good.
I got 27.
About 27.9. That's about what I got. So what do you need to do first?
I just took the amount she gets per her pay period and multiplied by 26.
This and did what?
Multiplied by 20 or 26, I think.
Yeah.
Bi-weekly.
So remember, if we're talking annual, the first thing we have to do is figure out what her annual salary is. So if this is for one pay period, we're going to take her $4,596.39. Take that times the 26 weeks, and how much does that give us? It's like 119,000.
119,000.
And how much?
119,506.
506. About.
Yeah.
Okay. So now if this is her annual salary, taking this, the amount that's being deducted for taxes, divided by this, should give us divide those two, should give us about 20, what do you say, 27.9%. So based on the deduction that's currently being made, if that ends up being her taxes, that's about almost 28% of her gross salary. Does that make sense? Okay, so now the next question, which I find interesting, was, so when you fill in your W-4 form, you usually put in a number, I think it's somewhere from like 0 to 6 or 8, something like that, that indicates like how much you want taken out of your salary for your withholdings for federal and state. And you can go in and change at different times and let them know, well, I think I need a little bit more taken out or a little bit less taken out or whatever. Sometimes you can only change that at the beginning of the year. So if you realize that you didn't get enough taken out in 2015, at the beginning of 2016, you can go into your employer and say, I want to adjust this. And so this question then says, based on her past records, Lorna knows that her total tax is usually 30% of her annual salary. So at the rate of deduction shown on the pay stub, will Lorna's employer have taken enough out of each paycheck to meet her tax obligation for the year? So it looks like no, right? We came up with, at the current rate, she'd have about 28% of her salary taken out for taxes. But based on this problem, it says that she's usually at around 30% for her tax burden. What makes this interesting to me, and I haven't quite figured out what's going on yet, is that if you look at the answer, they're saying yes. That it should be about 35.4% of her annual salary that's going to be deducted for taxes. So I'm not sure if they included Social Security and Medicare when they came up with this. Because generally, like I said a minute ago, they're not included. When you just talk about what are your taxes, what are your state taxes and federal taxes and what percent and all that, you don't usually include Social Security and Medicare in that number. So I'm not sure if they did, and that's what made them say the yes, or if they just made a mistake somewhere, or if there's something about this wording that I'm not picking up on, that they did something differently. But based on the calculation, which I think makes sense, the answer should be no. Based on the current rate of deduction, she's only going to have about 28% of her salary deducted, and she needs 30%. So I think the answer should be no. But if I figure out what the difference is here, I'll come back and let you know next class. Okay? All right, next example. This one talks about the W-2 form. So if you take a look at example 3 here on the bottom of the front side of your sheet. this is an example of what a W-2 form looks like. So your pay stub, you get every time you get paid. And it lets you know what's happening for this particular pay period and what's happening up to this point. W-2 form you get once a year. And the W-2 form is usually sent out to you in January, following the calendar year in which you worked. So for the 2015 calendar year, you get your W-2 form for 2015 in January of 2016. And then I'm pretty sure there's a due date that's end of January when they have to get you your W-2 form. And then you get until usually mid-April. It's usually the 15th of April. But if the 15th is on a holiday or on a weekend, they'll usually give you till the next Monday. But that's tax day in the US, and so you have about 2.5 months that you can get all of your tax stuff prepared and get all your forms filled out and get it sent off without any kind of penalty. Okay? So the first thing I want to do is just go through this document with you and make sure you understand what's being shown to you in it, and then we'll take a look at what the question actually is. So up here, you notice some of the boxes have a darker edge around them. That's kind of because those are the biggies. Those are probably the most important boxes on this form. The others are also important, but the dark ones are the most important. Okay? So the first one is up here, and that box is your Social Security number. So as the employee, your Social Security number is going to be up there in that box. Because that is how the government identifies you. That is how your employer identifies you. So that when they send money to the government on your behalf, it's all connected with that Social Security number. And that's how they keep track of what you owe and what you've paid and what you've already had withheld and what you're going to need to pay and all that stuff. Okay? So, number one, you need to make sure that that's always correct when you get that number. You need to make sure that every time you get your pay stub or any kind of documentation from your employer that that number's correct, because that's how the government keeps track of everything. It also means that in the United States, you cannot get a Social Security number unless you are a legal person to work. So if you're a U.S. citizen, you can get one. If you have a valid work visa, you can get one. If you have other compensation or other arrangements that allow you to work, then you can get one. But not everyone can get one. And the reason I know this is because when Bryce was about 1.5 years old, we came back to the U.S. to try to get him a Social Security number so that we could claim him on our taxes. But he wasn't actually a U.S. citizen yet. He was still a Brazilian citizen. The adoption part was done, but we hadn't done the U.S. citizen part yet. And when we went to the office, they told us we couldn't get a Social Security number because technically Bryce was in the U.S. on a tourist visa since he wasn't actually a citizen yet. And so there was no way that they could get us a Social Security number. So it wasn't until we went back to the U.S. our last time when we left Brazil for good and we were going back to the U.S., we had to have this whole manila folder full of documents that were signed and sealed, and we had to present those at immigration when we landed in the U.S., which was Chicago at that time. And they were the ones who opened it. We were not allowed to open any of the documentation. They had to open it. They had to see everything was okay, and that was the process to start getting an immigrant visa. And so he could be in the country on this immigrant visa until we could actually get his citizenship completed. And it wasn't until he had the citizenship completed that we could actually get him a Social Security number. Okay? So that's a big number when it comes to working and income and taxes and all that kind of stuff. Right underneath it is another identification number, but this time it's for your employer. So you have an identification number, but so does your boss. So does the company that you work for. And so all of the transactions that happen with regards to your salary and your taxes are all based on the number of the employer who's paying in for you and the number they're using to say this is for your benefit. And then you have the name and address of your employer. And right underneath that you have the name and address of the employee. So this whole left side is pretty much just identification information. Who's making the payments and for what employee they're doing that for. Okay? Then over here on the right side you have all these boxes that are numbered. Starting with box number 1 right there, which is another dark bordered box. Box number 1 represents your income. Your taxable, allowed taxable income. So any money that you've made that can be taxed, the total of that for the year is going right there in that box. Okay? And then using that number and whatever tax bracket you're in or whatever calculation has to be done, this is the amount. Oh, sorry. Let me go back. So this is the amount that you've been paid. This is the amount that has been withheld for you so far. Okay, this is not necessarily the amount you pay in taxes. You still have to figure that part out yourself. But this is how much has been paid in for you up to this point. It might be a little bit more than what you need. It might be a little bit less than what you need. It might be exactly what you need. But that's what that number represents, is what's been paid into you by the employer so far for the full year. Okay? Then underneath it, you see that same salary amount in box number 3, but this time it says Social Security wages. So this is the amount that's being used to calculate the Social Security amount. That 6.2% number. Okay? And then underneath that, box number 5 is Medicare wages. So if you had Medicare taken out, then you'd have an amount there as well. And then what the 1.45% number would be right there. I'm not sure why it's blank on this one. Medicare is usually always taken out, but that's where it would be. And then there are some other boxes here that get really, really picky and specific, and we're not getting that deep into this at this point, so we don't really have to worry about those. So really it's boxes 1 through 6 that you're kind of interested in. Now, that is all federal. Across the bottom here, they will then also list any state or local. So you've got the same salary amount right here, and then what your state withdrawal has been. Same salary amount right here, and if there's any local tax that needs to be withdrawn, that amount is right there. Okay, so this would be more of a city or county kind of thing, something at a smaller level than what the state level would be. Sometimes you get that, sometimes you don't. Again, it just depends on where you live. But you should definitely see your federal up here, and you should see the state amounts down here as to what your taxable salary is and what you've had withheld so far. Okay? So, the question here is, if this is the W-2 form that Joanne Toscano received, how much did she pay in taxes during the year? So what should we add up? Which ones? 2. Should we include 4?
No.
No, because that's the Social Security one again, right? So that goes back to what we talked about a second ago, that if they're asking you about what your taxes are, we don't usually include Social Security and Medicare. So we're actually not going to include our Social Security number. And then, which one?
The local income tax.
19 is that one, okay. Anything else?
State income tax.
And state income tax. So those three right there are the three that you should be adding up when they're asking you what's her tax for the year. Okay, and again, if we do add those all up, she ends up paying a total of about $22,287.50. Okay? We're actually not going to do that one. And let me explain why I'm going to skip this one. I originally thought it was a good question, but the more I think about it and having looked at it with the other class, it's not a good question because it's asking what percent of Joanne's gross income did she actually take home. Can you actually tell that from a W-2? The W-2 form tells me what? What kind of information is it giving me?
You're not able to tell because it says federal income tax withheld, but that's not necessarily the amount that you actually think.
That is true. I'm not sure that quite fits in with what this question's asking, though. This question is asking what percent of her gross income did she actually take home? So what does a W-2 tell us? Just summarize for me. These numbers are telling us what kinds of things. What taxes are being withheld? Are all of these numbers taxes? What's the other thing these numbers represent? The wages, right? So what we've got here are taxes and wages. Are those the only two things that affect how much money she takes home? Are those the only two things that ended up on her pay stub? On somebody's pay stub? No. So there's all these other contributions that maybe contribute to what she takes home that you are going to have no idea about when you look at a W-2 form. So when they ask you about what percent did she actually take home, you can't tell from a W-2 form. Because there's nothing here about insurance contributions or retirement contributions or anything like that. It's just about income and taxes. Okay, so it's not really a good question for a W-2 form because you don't have enough information. So we're going to skip it. So take a look at the other W-2 form. It's on the back. Top of the back side. It says Amy Springfield works at Pound Ridge Financial Planners. Her employer uses an electronic W-2 form as shown here. What accounts for the difference between her wages listed in box 1 and her Social Security and Medicare wages listed in boxes 3 and 5? So we just got done saying that in box 1, we have the amount of income, and then in box 2, we have how much was withheld. In box 3, we have the amount of income that's used for Social Security, and then box 4 tells us how much that was. In box 4, we have the amount used for Medicare, and box 5 tells us how much that is. And the question here basically is, why is this amount for income, whoops, get my pen back on here. Why is this amount in box 1 for income different than the amount they used in box 3 and 5 for income? What might be some possibilities as to why those two are different? Because shouldn't salary be salary be salary be salary? Like, why would those two be different? Lauren, that's my guess.
Is it like the maximum taxable income?
Partly. Can you elaborate on that a little bit more?
So, if you make more than a certain amount, don't you pay the taxes for that certain amount?
Okay, so that would usually go the other way though. Right? Because Social Security was the one that had the maximum allowable tax amount. And so if I was making more than what Social Security said the allowed amount was, then this one should be the bigger number.
Oh.
Right?
Yeah.
So good idea, but doesn't quite work in this case because of which one's bigger. Now, as a sidebar, between these two, box 3 and box 5, if one is bigger than the other, that's probably exactly what's happening. Okay? If my Medicare number is bigger than my Social Security number, that means I hit the maximum, and so the Social Security is being paid on the max amount, but Medicare is still being paid on everything. Okay? So that's if there's a difference between 3 and 5. But what about this difference where 1 is less than that? What did we talk about last chapter? Remember pre-tax contributions? The fact that you can take certain amounts of money out for insurance or for retirement before they calculate the tax on it. So that's probably part of what's happened here, is that they've got some sort of a retirement plan or a insurance plan where they can take the money out pre-tax, which means the amount that the tax will be calculated on is going to come down based on what the actual amount of income is. So that's that allowable taxable amount that they're talking about, but it's not so much because there's a cap, it's because we did some pre-tax dollar investing. Another thing that makes a difference is this box right down here. I think it's box number 14. See where it says CAF 125, $1,000? The CAF, if you look on page 347 in your book, stands for cafeteria plan. There is a section of the U.S. tax code that is section 125. That's where CAF 125 is coming from. And it allows you to hold back part of your paycheck into what's called a flexible spending account. And in this case, it's a CAF plan, cafeteria plan. And you can use that money for very specific things, like childcare, like medical expenses that don't get covered by insurance, very specific things. But you can take that stuff out pre-taxes, which is nice because it lowers your tax amount. The tough part about this is if you don't use all of it, you lose it. So you have to be careful about how much you're taking out, because if you end up not using all of it, you don't get to reinvest it or you just lose it. So $1,000 of this difference is right there, because they took $1,000 out for this CAF plan and used it to pay for daycare, used it to pay for, like if you have to do an 80-20 insurance, any of you know what I mean by that? Where you're going to a doctor that's maybe a little more expensive than what the insurance company says they want to pay. So insurance will pay for 80%, but then you have to pay for 20% of what your bill is. Well, if that 20% is not being covered by insurance, then you can turn around and take it out of this CAF account. Okay, those kinds of things. So that's part of what the difference is. But I'm sure part of it also probably has to do with a retirement program or something like that, where they're taking money out pre-tax, tax deferred, and that makes the amount that we're actually calculating taxes on smaller. Okay, so you will see differences in those boxes sometimes, and that would be a reason why. Okay. Last thing real quick, a 1099 form. This is the last thing that's on your form or your paper. 1099 form is used to communicate miscellaneous income. So if you are making money in ways that are other than your normal salary or normal wages that you would make from your job, this is how it gets communicated. So the example here that you see has to do with royalties, right? This may be a book that this author wrote, 10 years ago. So it's not like it's really part of his salary from last year, but yet he's still making royalties on it. He's still getting a little bit of money from having written this book. And so this publishing company every year will send him a 1099 form that will tell him, here's how much money you've made in royalties for this year from this book. Rent, that's box number 1. That's another way where you can be making some more money, but it's not really part of your salary. Other income, right here for number 3, that often is used for banks. Because if you're earning interest on some account, that's considered income, and you have to pay a little bit of tax on it. So they'll send you a 1099 form, and other income, they'll put in what your interest earnings were for that year. So this is just one more form that informs you of income that you've earned that is supposed to be considered income, but it's not really part of the normal wages and salary that you would think of. Okay, and again, most of this on this side is all identification info, and we're really just going to be interested in probably like these first 3 if anything's happening for our problems. Okay? All right, so basically what that means for today's homework is that you need to be able to read these documents to know what they're telling you, to find missing pieces from them, and to answer questions. Pretty simple. It's 7 problems, pretty straightforward stuff. But this is what's going to help us when we actually get into filling out forms and knowing how to fill them out, which is what we'll start on Wednesday. Yes? The last chapter, I'm going to probably wait until we have a quiz day, because you're going to need to take, those of you who have notebooks, want to take it home and do your homework tonight, whatever. So I'll probably wait until a quiz day where we don't have homework that night, and I will collect it at some point. It's just probably not going to be today. Okay?